As the IPO and SPAC markets are in decline, many are looking to secondary markets. That is, deals in which investors buy equity stakes from early backers, founders, and employees. But these transactions are often plagued with limited information and a lack of transparency when compared to publicly traded stock markets. So joining us now to discuss this issue is Avivit Ben-Avi, Managing Director at AST Private Company Solutions. Thank you for joining us.
Thanks for having me.
So first of all, can you tell us a little bit about AST and Astrella?
Of course. So AST is the second largest transfer agent in the U.S. They provide financial services to tech companies. Astrella is a subsidiary of AST. We have a software, cap table management software, and we try to give solutions to companies together with our partners from A to Z, from the day they're born until post-IPO.
So Avivit, I just want to tell you, Lidar, that Avivit is one of those Israelis that went abroad and came back with a lot of knowledge about private markets. She's been part of the Nasdaq private markets, right?
Correct.
And now she's with AST, which is one of the largest transfer agents in the US. And it's a fully owned subsidiary, Astrella, which provides cap table management solution. And I wanted, to speak with you, Avivit, about the problem which you raised during your article in a Kalkalist newspaper regarding the transparency problems in private companies' secondary transaction, something we know fairly well. So can you a little bit explain about what's the problem that you see in that and how do you suggest to fix it?
Of course. So as we all know, in the last period of time, there's been a rough situation with the tech companies. There is inflation going on, increase in rates. There is challenges in supply chains, the war in Ukraine. And as a result, we see a change in the behavior of the tech companies. We see less and less IPOs and SPACs, and we see less M&A transactions. We see a lot of cutting in jobs. People are trying to reserve their funds for worse days, I guess. And if in the past the situation was that employees and investors are looking to liquidate their shares and options through M&As and IPOs, we don't see companies are staying private longer these days.
Exactly. But the data, by the way, is that if you go back like 10 years ago, it used to take about 5 years, 6 years for a company to IPO at a valuation of, like 1 billion or 2 billion. Now at a valuation of 4 billion, and after 12 years, I think these are the numbers. You need to reach like a minimum valuation of 4 or 5 billion before you IPO, and it takes just a lot of time. We know from our market, companies who's now decacorns, they have over $10 billion valuation, still privates, still with the same article of association, problems with liquidity, first right refusals. The market need to be reinvented.
Reinvented, exactly.
So what is the solution?
So what we see now, actually employees and investors need the money. They need the money to buy homes, to fund their kids' tuition, to help their parents. And the question is where the money comes from. So we see more and more secondary transactions in the market. And the secondary transaction means an investor comes in and actually buys those shares from the investors from the employees. The problem is that we don't know what's the value of these companies, what's the value of these options. How can you know how much the investor is supposed to pay for these shares? And when you look at it more, you see that the investors are actually very high worth net individuals who come with money, with experience. Sometimes they're very well managed funds. And they know the business. And on the other hand, we have the seller, who's mostly an employee, who doesn't know the financial books of the company, doesn't know how much the company worth, what's the forecast. Really, what he knows is the exercise price of the option. And the question is that fair? Do we really want to make a deal or transaction here based on?
That's a good point. And by the way, there's US regulation that deals with tender offers. And those regulations clearly state that you need to disclose some information to the employee. And for example, with our product at Symmetry, we have a data room which the company can disclose financial reports to the employees and some business plans to the employees. So we go a long way to inform the uninformed about the transaction. I think this should be like the main core of what a secondary transaction is.
I agree, yeah. So I think that as long as we move forward, those secondaries need to happen more and more. And as long as they happen more, the management of the private companies needs to change the way they're behaving, and they need to show more transparency. They need to give more information to their employees. Employees need to know when they get options what the value of the option is. And one of the tools that those companies can use can be the 409A valuation. Those valuations needs to be reported to the employees. They need to know what's the fair market value of the options that they're being granted with. And I think the more companies will do that and be more transparent to their employees, the secondary market can grow more and more, and that can solve the problem.
All right, Avivit, thank you so much for taking the time to speak with us today.
Thank you.
Unicorn TV is brought to you by Symmetria. Symmetria offers ongoing liquidity management to attract and retain the best talents. Give your team the benefit they desire and deserve and win the competition over talents with Symmetria.